What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, in yesterday's video, I said the market was going to react in a very strong manner in one direction or the other. And obviously, a little bit after Jerome Powell started speaking, investors felt very confident that he wasn't going to steer away from his original game plan. You saw the entire market rebound. In this video, I want to go over some of the key points, what investors like. Also want to give you a short-term and medium-term outlook of the entire market. And we need to look at some technical levels. SPY headed right back into that resistance of 430. We're going to go over everything. So let's get right into it. First off, the key points. Half a point interest raise like expected. The Fed is going to begin their tapering at about $47.5 billion a month beginning June 1st. That was a little bit ahead of expectations. However, that number is a little bit lower. The biggest thing that Jerome Powell had stated that really that 75 basis point or even anything higher than that 50 basis point hike is really off of the table. He had said it a few times and agreed with some of the other Fed presidents that listen, anything more than 50 would just shock the economy a little bit too much. And he does really want to see how these rates affect. You can't just, raise rates and see 1 month, all right, and then immediately make another rash decision. Another thing he did say that I liked was that core inflation was gone down 2 months in a row. Core inflation is all items less food and energy. And as you can see right here, January's number versus March and February, I highlighted this in one of my previous videos, all right, that not including food and energy, inflation is actually subsiding. Obviously, we see the gas prices. We talk about it all the time on this channel. Okay, but besides that, inflation has subsided a little bit. However, this was not nearly enough evidence for Jerome Powell to really say that they have a grapple on inflation. And while I think there is two different sides to that, and the fact that he might raise rates a little bit too aggressively, I think investors really felt confident that they're going to stop kicking the can down the road. At least that's what he states as of right now. He's going to want to see consecutive months and a lot more evidence, right? The fact that inflation is really subsiding across the board before they begin the tapering. They are still targeting the same yearly target for where they want interest rates to be at by the end of 2022. Now, in another video, we will go over some of that CME data. It does need to adjust after the end of close, okay, and once everything gets finalized, because obviously the market did rebound very strongly. But let's get into the charts. We're going to take a look at the SPY daily chart. I will zoom in a little bit for you. Clearly, we are still in a downtrend. One of the good things about being in a downtrend when you get into that correction territory is the bounces can be very, very profitable, okay? And so what we talk about all the time inside of the group is you have old support becoming new resistance. And if you really take a look at this chart and just really focus on a few different things I'm going to point out to you, you're going to see this very clearly. You can see all the way back in about that September, October timeframe, SPY was at that 430 level. It went all the way up to 450, pulled back a little bit. You saw multiple candles with some wicks down, okay, at this level, stating that buyers were ready to enter. This is a good level of support. Coming from after the start of the year, at the end of January, you see massive wicks to the downside, saying buyers are, or indicating buyers are very strong at that level, once again acting as a very strong support. A little bit of choppiness here. We had that 450 psychological level as well. Came back down, broke through that. Now, one thing that we always look for when it comes to following a trend is old support becoming new resistance, or old resistance becoming new support. All right, if it's a downtrend and you want to continue that trend to the downside, you do want the old support to become new resistance. It's confirmation of that level, stating it is going to hold. So naturally, looking at this chart, considering we are moving in a downtrend, if this level does hold as a resistance, you're going to see a bigger move to the downside, especially because looking right here, you do have lower lows being made. We bounce off that 405 level. Also, not to mention, in the matter of just a very short period of time, the SPY moved from 405 to 430. It's about a 7% gain in just a matter of 3 days. That is a massive move to the upside. However, on a complete contrary side, we do have the next levels of 438, and then obviously that psychological of 450. Before that, you might see a little bit of resistance at that 446 level. You can see where my line is on the chart as of right now. But naturally, you're going to continue to see these bounces react very strong. I don't think we are completely in the clear, especially because the way Jerome Powell had stated, he wants to see consecutive months of growth. He really wants to see the labor market continue to be strong. However, the choppiness is probably going to subside a little bit as well. The VIX, which is a fear and volatility indicator, you can see right here, this massive red candle to the downside. Okay, this kind of reacts in inverse to the indices. It's also directly priced in when it comes to the IV of options if you are playing options. So why some of your call options that you bought today, if you did, probably move just a little bit slower because you have the IV that is dropping, which is hurting your premiums as you continue to move higher to the upside. Seeing the VIX down lower at these lower levels is a very positive sign. All right, obviously, we're probably not going to get back to that $16 or $18 levels, but getting back down to that $22 to $24 levels, investors feel a little bit of more calmness, a little more certainty. Stocks tend to move a little bit more in a directional pattern, okay? Meaning that if we do, break some support, there is some move, some news that makes us want to move to the downside. It's a little bit slower, more consistent move to the downside on the intradays, and you're not getting those whiplashes that you see, which is the crazy volatility where you're really just pinging back and forth between support and resistance. So this is one thing I always keep an eye on. This is actually something that a phenomenal trader learned from, or that I learned from really more of a recent time to keep an eye on VIX, probably over the last year of my trading. But guys, keep an eye on this going forward. I would still like to see a bigger rally out of the SPY. Wouldn't be surprised if we just see it hang around this 426 to 430 levels overnight, and the futures kind of bounce off between there. Maybe see a little bit of pull at the open, which is natural for some profit taking, and then continue that movement to the upside. Overall, I think what Jerome Powell said is a slightly brighter outlook for the future. We still do have a lot of hurdles, which is exactly what he stated. And like I said, going back into that smooth sailing market like we were in just probably isn't in store as of yet, but avoiding that serious crash is looking a little bit brighter going forward. So that's it for this video, guys. I'll see you in the next one.